What happens if the US economy tanks? When America sneezes, the world catches a cold. The US is the world's largest consumer market. When Americans stop buying, shockwaves hit factories in China, farms in Mexico, and beyond. A US slowdown means fewer orders for global suppliers, leading to factory shutdowns and job losses worldwide. The dollar's dominance means Federal Reserve moves ripple across the globe. Some nations are more exposed than others, especially those tied to US trade, investment, or remittances. Tonight, we'll look at the 10 countries most at risk if America's economy falters. These nations are so connected to the US that a downturn there almost guarantees pain at home. From trade to remittances, their fortunes rise and fall with America's. So who should be most worried if the US economy starts coughing? Let's count down the countries that need to brace for impact. Grab your economic medicine. America's about to clear its throat, and the world is listening. Number 10 is Mexico. Over 80% of Mexico's exports go to the US. Cars, electronics, avocados, you name it. When Americans cut back, Mexican factories feel it instantly. It's not just trade. Remittances from Mexicans in the US are a lifeline, totaling $60 billion in 2022. A US recession means job losses for immigrants and less money sent home. So, a downturn in the US doesn't just slow Mexico's factories. It hits dinner tables across the country. Mexico's economy is America's shock absorber. That's why Mexico is first on our list. Next up, America's northern neighbor. Number 9 is Canada. About 75% of Canadian exports, oil, lumber, auto parts, go to the US. When US demand drops, Canadian industries slow down. The Canadian dollar often falls with the US economy, making imports pricier. Canada's supply chains are deeply tangled with America's. The two economies are so intertwined, it's almost impossible to separate them. When the US sneezes, Canada gets the chills. Now let's head across the Pacific. Number 8 is China. For years, the deal was simple. America buys, China makes. The US is China's top market for goods, electronics, toys, and more. When Americans stop spending, Chinese factories go quiet and workers face layoffs. China's government needs growth for stability, so a US recession is a headache. Despite efforts to boost domestic demand, China's economy is still export-heavy. If America goes on an economic diet, China feels it. Next, Japan. Number 7 is Japan. Japan's cars and electronics are staples in the US market. When Americans stop buying, Japanese profits plunge. Japan also makes high-tech parts for US products, so the impact is widespread. A US recession can strengthen the yen, making exports less competitive. Japan's export-driven model is highly sensitive to US demand. When the US slows down, Japan's economy feels the chill. Now, to Europe's economic engine. Number 6 is Germany. Germany's economy runs on exports, luxury cars, machinery, chemicals, and the US is a top buyer. If the US slows down, American orders for German goods drop, especially big-ticket items. As Europe's largest economy, a German slowdown ripples across the continent. If the US stops buying, Germany's export machine sputters, and so does Europe's. The German engine needs American fuel. Without it, the Eurozone could stall. Next, South Korea. Number 5 is South Korea. Korea's tech giants, Samsung and LG, sell millions of gadgets to Americans. The US is also a key market for Korean cars like Hyundai and Kia. A US recession means fewer electronics and cars sold, hitting Korea's export-heavy economy. South Korea is often the first to feel global slowdowns, a canary in the coal mine. When American demand dips, Korea's economy wobbles. Its fortunes are tightly linked to US consumers. Number 4 is the United Kingdom. London's financial sector is closely tied to Wall Street. When the US stumbles, London feels it. The US is the UK's biggest trading partner. A US recession means less demand for British goods and services. Post-Brexit, the UK relies even more on US trade. The UK's economy is exposed by both finance and trade. Next, Vietnam. Number 3 is Vietnam. Vietnam's manufacturing boom is driven by exports to the US, from sneakers to electronics. When Americans cut back, Vietnamese factories lose orders and jobs are at risk. Vietnam's growth still relies on foreign demand. A US downturn could derail its story. Vietnam's rise depends on American shoppers. Now Brazil. Number 2 is Brazil. Brazil is a commodity powerhouse. Iron ore, soybeans, oil, but global prices depend on U.S. demand. A U.S. recession sends prices tumbling, hurting Brazil's economy. Nervous American investors pull money out, crashing Brazil's currency and markets. It's a tough spot for an already volatile economy. Finally, the country most at risk. Number 1 is India. India's IT sector relies on U.S. companies. U.S. cuts mean lost contracts and jobs. The U.S. is a key market for Indian exports. Remittances from the U.S. are vital. A U.S. recession threatens IT exports and remittances. India's growth is tied to American demand. If the U.S. stops spending, India feels it everywhere. Now, the global picture. So what have we learned? A U.S. recession isn't just America's problem. It's a global shockwave. Factories slow, jobs vanish, and currencies tumble from Mexico to India. The world's supply chains and financial systems are deeply intertwined. Remittances dry up, commodity prices crash, and emerging economies face crisis. The 10 countries on this list are the most exposed, but no nation is immune. When America sneezes, the world catches a cold. The global economy's strength is also its vulnerability. That's the price of a connected world.